Hey, welcome to the Weekly Spark, where we talk about sparks of information that have happened over the last week or so inside the mortgage and real estate industry. I'm Ryan Speltz, and I've got my business partner here, co-owner of Creative First Mortgage, Jason Maxim, and we're super excited to be launching this for you guys and kind of getting out some important information that you're going to need to know because your clients will ask you about it. So we're going to jump right in, Jason. I hope you're ready because we got some cool stuff this week. So
let's do it, man.
All right. First topic. This came out on Tuesday. Fannie Mae and Freddie Mac are now allowing Vantage scores. What kind of impact do you think this is going to have?
Yeah, so I think this is really good because what it does is it allows other credit agencies to compete with the old versions that mortgage companies and automobile lending companies have had to use for the last several years. This was actually put in place a couple of years ago, and they had to the end of this year to implement it. So I think it's going to really greatly impact not only competition for other credit reporting agencies, but also Vantage a lot of times is a better credit score, especially for people with not a lot of trade lines. So I think this is going to be great for buyers and first-time home buyers.
Yeah, I think my only worry about it is time to implementation because we know the government can move quite slowly. So we'll see how fast these GSEs get it put into place and adapt for the entire industry. So the second topic we've gotten is kind of a big one, obviously. The big, beautiful bill, as we say, was signed into law. And Jason, I know you've kind of covered some information about it. Give me a summary about it. I know we've got a podcast recorded on it, so check out the podcast on our website. But Jason, jump in. Tell me what the most important piece of this is.
Yeah, so shameless plug, guys. We go in depth on this on our podcast, but the big, beautiful bill, it does have some advantages in the real estate market. It's got some great tax advantages, and for mortgage interest deductions are really good. My only concern with the bill is this huge $3.4 trillion addition in debt, which never is good for bonds, which means we may see some rate increases.
Then the last thing we've got, and I know you did a video covering this as well, is cryptocurrencies are finally being allowed to be used as assets. And I know that helps out a lot of our clients. What do you think the best advantage of this is for people in the market?
Yeah, so listen, I'm a big fan, and I know you are, of cryptocurrencies. I love to see the implementation of cryptocurrencies as a utility for banks, enterprise solutions, and other great things that can be done quicker, faster, and cheaper. But, I think for this, it's finally being recognized as an asset that we can use for buying homes. So we don't have to sell our crypto anymore. We can use what we have and use that as a regular asset, just like a bank savings account, checking account, and things like that. So I'm really excited for the movement of cryptocurrencies in our
I think it's a great thing overall. We've got a couple of clients even in the process now that are going to benefit from this if it gets put in place fast enough. But, one of them we had talked with that he's going to have to sell his cryptocurrency to be allowed to use it as an asset. And it just doesn't make sense with the way the investing has gone. So the last thing we'll do on the Weekly Spark is Jason's going to cover just a quick touch base on what the charts are looking like right now. And as we record this, so Jason, take that and go ahead and share your screen and show us the chart.
Absolutely, guys. So let me go ahead and jump into it here. So is it up?
Yep.
Okay, perfect. All right, so we are 9 basis points up in the bond market, which, again, if you're watching my content, this is good for interest rates. The 10-year is falling, which is also good for interest rates. So back to the chart, we've seen this great upward trend here in the bond market, which is really good. And last week I told everybody, this is a good time to lock for short term. And, wouldn't you know it, we get up to this top, we hit this Fibonacci level, and we started trending back. Now, the good news is these lines where we were hoping to become lines of support, whereas before it was lines of resistance, it looks like it's going to hold, and it's now shooting back up. Here's the concern, though, guys. The 10-year is still fighting these lines, and as it's going down, we're going to run into these lines of resistance, I believe. So we do have some concern that the 10-year will continue to rise. And so, for someone that's a lot less risk averse, I'm advising that we lock rates. Let's lock in these gains. Look at this. We just jumped up another 12 basis points. So we'll be continuing to watch where these rates are going based on these charts.
Awesome. Thanks for that quick share. And guys, if you're interested in, or if you got a topic you want us to cover and kind of break down a little bit, we're open to getting some ideas in here, and you'll see us again next week. So thanks for watching, and we'll see you on the next Weekly Spark.
Thanks, guys.